Good morning, everyone. Good morning, Stuart. Good morning, Cynthia. Good morning, or hello, Alex. Um, yeah, I hope you guys had a great night of rest. I hope you guys are rested well. And what we're going to do today is cover quite a bit, and we're going to do a brief review of the Forex market, some of the basics, and then we're going to get into some of the good stuff. We want you guys to leave these sessions every morning with more confidence on how to trade the markets. Now, good morning, Regine. I know she's new, so I have to make sure I keep everything fresh and basic, not just for her, but I think we have a few new people that's coming today. I know over the past few days, we had, a few people join us, and they're beginners, but they really do have a passion as far as wanting to learn how to trade and make money from the market. So then we're going to touch on the basics today, and then we're also going to end this webinar teaching you something that you can do for next week, something that you can apply in the markets to help you find some good trading opportunities in the market. So then I hope you guys have your pen, your pad, your paper. I hope you guys are prepared to take notes, especially if you guys are here for the first time. If you guys have been with us for a while, then you guys should be okay, because a lot of this stuff will simply be review. But we won't take too much time reviewing some of the stuff that we mentioned in the prior weeks, but we're going to cover it just for the sake of just covering it. Oftentimes it's just good just to review some of the topics and just have a refresher over some of the stuff we mentioned in the past. So with that said, I'm going to pass the mic to Marvin. Did you have anything you wanted to share?
Yeah, well, I was going to say good morning, everyone. Thank you guys so much for joining this morning. And just like Melvin said, we're going to do our best to sort of keep this general. We have people at different levels that are on this webinar, but we're going to briefly introduce some of the basics. We feel that it's very important. If you have a good concept or a good grasp on the basics, that would definitely help you regardless of what level of trading you're in. I think a common misconception is that people tend to think, well, let's just move beyond the basics and move into more of the advanced stuff. But if you don't have a solid understanding of the basics, which really forms really the crux of your trading method, your trading model, your modus operandi to some degree. But if you don't have a good, solid background, then it'll be hard for you to really understand or really even be successful as a trader and really grab a hold of the advanced concept. So that we think even regardless of what level you're at, it's just good to review the basics, the fundamentals.
Yeah, but we're going to make sure that every session you guys will leave here with something that you could use, something that you could, use in the market, and that would be beneficial to you in your trading. So I guess right now, yeah.
Do you want to pull up the survey or,
Well, let's not do that for now.
Okay.
Let's just run through it, because we were going to give you guys a quick
quiz,
an interactive quiz. But for the sake of time, and and also because we have some new people watching today, we're just going to jump into it, and we're going to review these simple basic concepts, and then we're going to jump to the good stuff, some trading stuff. We may touch on what we also talked about last week. I know we have a lot of questions about that. We shared with you guys a good strategy that you could use, and I'll put this chart up so you guys can remember. But remember, we talked about the US dollar, Canadian dollar, and we talked about this method that you can use. Now, this is a little bit more advanced for some of the beginners, but we may answer some of your questions depending on if we have time. We may answer some of you guys' questions in regards to this method, because if you use this method, then you will do quite fine. But we also want to introduce something else. But anyways, let me go back to where we were, and let us talk about the basics. So first question, for those that's been with us for a while, what is the Forex market? We're going to quickly go over this. We can answer these questions together, but what is the Forex market? When you think Forex, what do you think? Now, this is for those that's been with us for a while. You guys can answer these questions. You can put your answers in the chat area. Okay, so then Ryan gave the simple definition of it. It's the buying and selling of currency pairs. And I like the fact that he mentioned currency pairs, because even though in the Forex market, well, the long name for the Forex market is the foreign exchange market. It's the foreign exchange market. And whenever you travel to a particular country, you have to exchange your nation's currency for that other nation's currency. So then if you're from the US and you travel to Japan, you have to trade your US dollars for Japanese yen. So then you're going to go to a currency exchange and you're going to make that exchange. And whenever you do that, you're participating in the Forex market. You made a trade in the Forex market without you even knowing it, just from you traveling to that particular country. So then if you go to Japan, then you pretty much made a trade. You traded your US dollars for Japanese yen. That's what you did. So then I know Cynthia answered it's the largest exchange market. Yes, and that's true. It's the largest financial market in the world. $5 trillion a day is traded in this market. It's going back and forth as far as transactions. $5 trillion worth of transactions and turnover per day happens in this market. So it's the largest financial market in the world, and it's larger than the New York Stock Exchange, because the New York Stock Exchange only trades about $22.4 billion per day. So then you got 22.4 billion compared to 5 trillion per day. In a nutshell, the New York Stock Exchange is very, very, very small in comparison to the foreign exchange market.
The turnover.
So then it's tiny. It's very small in comparison to the foreign exchange market. So that just goes to show you how much money and turnover and cash is moved in the foreign exchange market. So then it's a big difference as far as the size. The size of the foreign exchange market is much bigger.
It's very liquid. The market is very liquid.
Yeah, which means that there's opportunities to make great money from it. So with that said, I guess we can move forward and we can ask you guys the second question.
Well, no, what they still haven't, fully answered.
Okay.
All of question one, but I'm looking for something else, because I know we got that it's the buying and selling of currency or currency pairs, which is true. It's the largest financial exchange in the world. And just like Melvin brought up, most of us probably have engaged in the Forex market and didn't even know it. If we traveled to a certain country, we had to trade or exchange our native currency for the destination country's currency in order to buy and sell goods within that country. But there's another definition, or there's something else that I want you guys to share about the Forex market. What makes the Forex market different than other markets like the stock market or the futures market? What's one of the main benefits of the Forex market? And I'll give you guys some time to figure it out. Just for you guys that have been with us for some time. Yes, exactly.
Yeah, Ryan
answered it correctly. It's open 5 days a week, 24 hours a day. So that means that once it opens on Sunday night in the US, it'll be Sunday night here. Once it opens, it stays open for 5 days. There's no downtime. There's no closing or market close, but it stays open 24 hours a day as it trades the different financial sessions, or, pretty much Borises of the day. Like it goes through the Asian markets, it goes through the European markets, and then it ends the day with the US markets. But there is no definitive closing time or closing period during the week or on an intra-week basis. It opens in the beginning of the week and then it closes during the end of the week. So it can provide plenty of opportunities for you to trade and make money, even if you're working a typical 9-to-5 job. Like if you find yourself having to work and you have a career, then you can still make money trading the foreign exchange market on those hours when you're not at work. During the evening, during the U.S. evening, or even in the early morning, European session. So then it provides plenty of opportunity for you to actually engage the financial market and actually grow your money. So then that's one of the benefits of also trading in the Forex market, is that, it's open 24 hours a day, 5 days a week.
Yeah, unlike the stock market, because the stock market closes every single day at a certain time. It closes right around 3:34 p.m. Each day. So then the forex market stays open. So then even when the stock market is closed, you'll be able to still trade the foreign exchange market and make money from it. So the next question is this: I know we talked about exchanging currencies and making transactions, and I think Ryan mentioned how the forex market is the buying and selling of this type of group. And I'm just gonna let you guys. So then, when we're trading the foreign exchange market, what are we really buying and selling? Are we buying? Well, I don't want to answer it, but yeah, let me just jump for the sake of time. Let me just jump and just say, okay, we're buying and selling currency pairs, right?
Mm-hmm.
So then, like in other words, whenever you make a transaction, you're making a transaction in a bundle. Like you're not buying and selling individual currencies.
Mm-hmm.
That's one thing that you have to understand. But what you're doing, you're exchanging one currency for another one. So you're always trading a bundle. Like, for example, right now we're looking, like we gave you the example, like if you're from the US and you travel to Japan, you have to trade your US dollars for your Japanese yen, right?
Or convert or exchange.
Yeah, you have to convert it or exchange it. Now, if you look at this chart right here, we're trading this pair right now, the US dollar, Japanese yen right here. The US dollar versus the Japanese yen. That's what we're looking at right now. When you see all this price movement with these candles, which we will explain later, that's what we're trading. So then whenever you go to Japan, you have to convert your US dollars into Japanese yen. Now, whenever you do trade the foreign exchange market, when you're in front of your platform, what you're going to do, you're going to place a transaction on what we call a currency pair. You will always have one economy or one currency paired with another one. And that's how you trade in this market. You're not trading isolated currencies.
Yeah, and that also is what gives you the exchange rate, because really, as a trader, when you're trading in the forex market, you'll sort of be speculating on what the exchange rate will be. So then, just like we said, we're trading the forex market in pairs, in bundles. One currency, one nation's currency will be compared against another nation's currency. And the difference between the value of those two currencies will be the exchange rate. So then what we do as speculative traders, we're going to be forecasting what will the exchange rate be down the line based on what our charts are showing us. Like where would the exchange rate go? Or so then we're going to make money on sort of forecasting where these exchange rates would be and where they would go in the future.
Okay.
So then that's
yeah. Were you finished?
Yeah, I'm done. Yeah.
Okay. Yeah. So then, I just want to explain this briefly because I know we got a lot to cover today. So then, right now we're looking at the U.S. dollar versus Japanese yen. For now, you can just see it as that. Like each currency pair is one currency versus the other currency. In this case, it's the U.S. dollar versus the Japanese yen, and what you're trading is the exchange rate. So then, what does this mean? Like when we say that price is right now, you look to the right, like this is where the candle closed, and if you look to the right now,
the current
value or exchange rate between the US dollar and Japanese yen is 107.074. So in other words, what does that mean? Well, this is what it means. I'm just going to write it down right here. What this means is that one US dollar equals 107.074
yen.
Japanese yen. So then that's what that means right there. One US dollar equals 107.074 Japanese yen. So then based on that, which one is the more stronger currency? Based on us, okay, so then which one do you think is more stronger? The US dollar or the Japanese yen? And remember, it takes 107. Okay, let me actually. Okay. Cynthia said the US dollar. Yep, exactly. The US dollar, which is pretty obvious because it takes 107.07 Japanese yen to buy one US dollar. So then that shows the US dollar is the strongest out of the two currencies. But what we're trading is the exchange rate. What you see on the right in this price chart or in this column where you have these values, this is where where we get the exchange rate between the two currency pairs. So then that's the value that's being plotted to the right is the exchange rate. You're exchanging one currency for the other, but you're doing it at this exchange rate. So then if you had 20 US dollars, if we pull up a calculator, let's do that right now. Hey, let me pull up a calculator. Okay, and if you had 20 US dollars, right? Let's say you had 20 US dollars and you want to convert that to Japanese yen.
Oh, you remember it's the application, so they don't see that. It's not a
Oh, yeah, you're not seeing it. Okay. Yeah, I thought you, yeah. Okay. So then if you have your own calculator, you could pull out your own calculator. If you take 20 and then you times it by 107.07, that would tell you how much Japanese yen you would get. So if you had 20 US dollars, that would give you about 2,141 Japanese yen. So in other words, that's how much Japanese yen you'll have. So then if you had 20 US dollars, that equals 2,141 Japanese yen, pretty much. Yeah, right there. All right. So then I hope that makes sense. Let me know if that doesn't make sense. But if it does make sense, then we can definitely move on. But what you're doing is trading one currency in exchange for the other. Let's go to the Euro USD, right? And I know I have these lines. Let me clear this out right quick. Okay, so then right now we're looking at the Euro USD. You can see that the value of the Euro USD is 1.08197. In other words, what this means is that we're trading the Euro versus the USD. You can see on the upper left what we're trading. So then in this case right here, 1 Euro dollar equals 1.08 US dollars, you can say US dollars. Okay, so then let me just zoom in so you can see this a little bit better. So then I know it's kind of hard for you guys to see, but if you look to the right, you see the exchange rate right here. You see that the exchange rate for this pair right here is 1.0819, right? That's the exchange rate, which means that 1 euro dollar, 1 euro is equal to 1.0819 US dollars, or pretty much $1.08. So then that's what that means. So then you get the exchange rate on that right column. Now, let me ask you guys this question. Which currency is stronger or has the highest value out of those two currencies? Which currency has the highest value? Okay, then I think Davina said the euro. Alex said the euro, and you guys are correct. The euro has the highest value out of those currencies. So then this is just some basic stuff for you guys to know. When you are trading the market, what you're doing, you're trading the exchange rate. You're trading one currency against the other. You're determining which currency has the strongest value at a particular time or is strengthening at a particular time. You're doing that when you're trading the foreign exchange market. Now, I know I'm rushing through a lot of this, but I'm just trying to take my time and do this as quick as I can, while at the same time being mindful that there's other stuff that we want to share. But if we don't have any questions, we can definitely move forward and we can talk about price, right? Because we mentioned in one of the webinars that, of course, you see price, you see this movement up and down on this chart. And what we're seeing is the fluctuations of the exchange rate. The exchange rate is constantly moving up and down. But this price is plotted. Okay, well, let me ask you guys this question, okay, before we move on. And I know we mentioned this on a few of the last Back to the Basics sessions. Okay, like whenever we do trade the markets, we use certain indicators, right? What's the most important indicator on your chart right now, or that you use as a trader? What's the most important indicator? Okay, yep, Cynthia said price, right? Davina said price. price itself, like how it moves, how it goes up and down, where it's coming from, that's the most important indication on what you should do next, right? And when we talked about price on, I think last week or 2 weeks ago, we said that price could be plotted in two ways on our charts. There's two chart types that we mainly focus on. And one of them is what? One chart type is what? Like when you think of like what do we see right here on this chart? We see like when you see these bars right here, what are they called? These individual bars. Okay, yeah, Chris said line chart. That's what I was wanting. Line chart or candle, exactly. So then you can chart price or plot price either through a line chart or a candle chart, candlestick chart. So then let me take you guys to the line chart. So what we're going to do is you can click on this icon where it says where we got the candles and select line chart right here, right? So then right now we see the line chart and it's simple. All the line chart tells us is where price is going, directionality, and what the closing price is. That's what you get from the line chart. All you pretty much just get directionality and you get an idea of what the closing price is, but you can also determine where support and resistance is, which we will talk about later, because I know that's something that we definitely want to focus on. We want to share with you guys an easy strategy that you guys can use next week. But this is the line chart, and it's pretty apparent that it's plotting how price is moving, and you get an idea of directionality. So then it's pretty simple in a nutshell. It's pretty simple. You know, it's not too hard to really figure out. You know, price is moving up here, then moving down, then moving up, then moving down, moving up. You know, you get the movements in price. So it's pretty simple. Okay. So the only thing about the line chart is that it only gives us one set of data and we don't know much about it. So then this is why we recommend using the candle stick chart. So then if we go to the candle and we see these candles plotted. Now, what I'm going to do is zoom into a particular candle and we're going to break down what this candle is and all the data points. So then let me just zoom in to this one again. And I know this is a rehashing of what we talked about before, but the more we review it, the more you'll get it in your head and you'll know what's really important. So then let me start with the daily because I want to do something once we get there. So then let's start with, okay, yeah, let's start with this candle right here. Okay, so let me remove this. Okay, so then we're going to start with this candle right here. Let me just put this replay tool on and remove everything to the right. Okay, so then we see this candle right here. Now, what you see is what we call the Japanese candlestick. And what it does is plots the price over a certain period of time. So then what you will get is 4 data points. So then let me ask you guys this question. On candles, what are the major data points you get from a candlestick? Or what does a candle pretty much tell you? Okay, so Audrey said open, close, and high and low. Exactly. So it shows the open price. And as you guys know, or may have, let me do this right quick. The open price is always where the previous candle closed. So then right here on this red candle, this is the open price right here. So then we're going to say open. Open price right there. Okay. So then this is where the last candle closed right here. And then this candle opened with this being the open price. And then right after the candle opens, we have a high and low. Yeah. Okay. So then the wicks represent either the high or the low. of this particular candle on this day. Because for those that may need to know, what we're looking at right now is the daily chart. So each candle represents what happens in one day. So then this is from this candle right here is from October 21st, 2019. We're just using this as an example. And this just represents one day's worth of trading activity. So then for that day, we see that price opened right here, which was around 1.1170. And we had a high and a low for the day. So then while price is moving throughout the day, it's creating a high and a low. So then in this case right here, for this particular pair, price created a high at this wick right here. You see this wick? I know it's kind of hard to see, but right here is where price created the high. So then we're going to call this the high price. That's the high price. And then down here, we're going to call this where the wick is at the bottom, the wick of this candle. We're going to call this the low price. This is the low for the day. Okay. And then we have this candlestick body, and the candlestick body just pretty much shares with you where the bias is, or where momentum, or whether the market or whether price fell and
Close. Where it
where,
opened
yeah,
and where
yeah,
it
where
closed.
it opened and pretty much where it closed, pretty much. So then the next thing we have to define is the closing price. So we'll do that right here. We have the closing price. Okay, and we could put that right here, right there where this candle closed. So then whenever the closing price is below the opening price, is that a bullish or bearish candle? Let me ask you guys that question. And this is just a basic general definition of it. It's a little bit more complex than that. But let me ask you guys this question. Now, for those who may not know, a bullish candle is when price is moving up. Remember, bulls represent up, bears represent down. You know, bulls represent the market's going up, like bullish represents up. Bearish represents down. The market's going down. It's a bear market. Bear represents down, bull represents up. So I just wanted to break it down. So then whenever the closing price is below the opening price, that's in a nutshell would give you a bearish candle, right? In most cases, it gives you a bearish candle. So then the price for that day was bearish. Remember, this is the daily candle. It represents a bearish market price.
Yeah, and I was gonna also say, like, even with this chart template, they make it easier for us because they have it actually color coded. Where, of course, when the closing price is below the opening price, it ends or closes in the color red. So then it helps us to sort of visually see whether a candlestick or whether that day's price action was whether it's moving lower or to the downside, whether it was a bear day or a bear market, or whether that day was a bull market or bullish day. So then that's the good thing about candlesticks. It provides more detail through colors, through the different points of data, and we can be, how can I say it? We have more information and more intel to make greater trading decisions. So then that's the reason why the candlestick chart is one of the more preferred chart setups or chart types that you use when trading any type of financial instrument. So then, but yeah, like the good thing about candles is that it is color coded. They make it easier for us. And also it contains 4 sets of data or 4 data points. Whereas for the line chart, we only got 1 data point. We only got the closing price for that time period, and it can only show us or reveal directionality. But with the candlestick chart, we're able to identify what the direction of the market is. We're able to identify the various price points within that time period. So then it provides more intel and more information for us to make better trading decisions. So then that's the chart pattern that we use for most of our trading, or that's the chart type we use for most of our trading.
Yeah. Okay. So then we see here that we have 4 data points, which are, very important, even though To me, the most important data points on any candlestick are the closing price and the high and low price. Those are the two most important, or the three most important data points. The opening price is okay, but you don't really need to know that. And I'm going to share with you why in a little bit. Like, once you really understand how this works, you're going to get aha moments. You're going to be like, okay, wow, now I get it. Because what you will see is that oftentimes a previous day's high or low will represent support and resistance for another day in the future. So, for example, in this case, the low was right here, right? Now, what did we see 2 days ago? Like, this is, let's just say that this was the current candle. What did we see 2 days ago? We see that the previous candle's high was what? Okay, this was the candle from 2 days ago, right? Now, based on what you see, what does that tell you about the previous candle's high? What did they act as? The previous candle's high. I mean, no, the two, yeah, the from 2 days ago. Let me just say that. Like, this is the current candle in the day in 2 days ago. I know I said the previous day's candle, but the candle from 2 days ago, that high. What did it act as? That high right here. Let me just mark it. So then this was the candle from 2 days ago. And we see that we had this wick to the upside, which created a high, right? Now, if you look at the current candle, what could you say about that candle's high from 2 days ago? Yep. Okay, exactly. Okay. What I know, Andreen pretty much answered it, but what you see, yeah, like, and Greg said that day's high price is the current day's low price, right? That day's high price right here from 2 days ago is the current candle's low price, which means what? What did it tell you about this current day's high? It acted as what? And I think Angie said it's support, right? Yep. That this candle's high acted as support, which is a floor, right? Now, for those who may need an understanding or refresher on support and resistance, let me just do this briefly for you guys. But remember what support and resistance is. Support is this. Let's just say that, or let's just keep it in simple terms. Let's just say that you had a ball and you bounced the ball on the floor, right? Let me just zoom out a little bit. Okay, let me zoom out. Okay, so let me delete this and let me do this over again. Let's just say that you had a ball, right? And you bounced it on the floor. What do you expect to happen to that ball when it bounces or when it hits the floor, right? You expect that ball to bounce higher. So if you bounce a ball on the floor, you expect it to bounce up, right? So then this is how support works. Support is this. Whenever price hits support, which we would consider a floor, you'll typically see price bounce from support. You know, so then price will fall, hit support. Remember, support is like the floor, and they'll bounce from it, right? But we also have resistance, which acts as a ceiling. So if you have a ball that you throw up to the ceiling, then you expect that ball to ricochet and bounce from that ceiling and head down. And that's what resistance is. Resistance is like a ceiling. Whenever price or whenever a ball or price hits a ceiling or resistance, then it's going to bounce from it. It's going to shoot down from it in most cases. So then that's the basics of support and resistance. You'll typically see price bounce from the floor and push up, which is support, or it could, if it rallies and hits resistance, it would fall from that ceiling, that resistance, and head lower. That's what it is in a nutshell. It's really, really basic. So then if we look at this candle again, if we zoom in to this section again, and we're going to drop down maybe to a smaller or zoom in to a smaller time frame to actually have you guys see this. But let me zoom in a little bit more. Okay. Let me stretch this out. Okay, yeah, that's as good as it can. Okay, so then we see here that price went to this level and then it ricocheted off it. It bounced from it. Now,
Yeah.
this is the candlestick level. You'll be able to see what happens more clearly when you go to a smaller time frame, which we may do in a little bit. But yeah, I know Marvin wants to share something.
Oh no, I'm just going to reemphasize how you can see here how this day's low price, it found support, and of course the level that it identified or the level that it fell to was a previous day's support resistance. So then one thing I just wanted to point out is that there's certain laws, like even in nature, when you have certain laws of nature, like when you do hit some type of a surface, there's always going to be some type of a bounce or a ricochet from that surface. Typically, whatever object is going to respect that surface. And that's typically what we see happen, happen even in trading, even with these certain price levels that serve as resistance and support, you're going to always see price respected. But there are cases where those levels are violated, and it's a sort of like an aberration or a violation of that law. So then there's certain things that we can grab, or there's certain details or intel that we can get when it does violate a certain level. And we'll talk about that a little bit later. But really the key to trading and really having a good solid understanding of how to trade any financial instrument is you need to really have a good grasp on what support and resistance is. And there's more to it technically, but for the sake of this webinar, we're trying to keep it basic. We're not trying to go too technical in it, but it's really areas of supply and demand. There's areas where with the support, it's typically areas where there's a lot of buyers or bids placed at that level, and that particular asset bounces from that particular price level because there's a lot of buyers that flood the market, or there's orders to go long and bid on that particular asset at that particular support.
Yeah, I know Cynthia had a question. She said the previous candle was support because it opened higher because it hit the floor. No, well, I'm going to try to explain this in a bit more detail soon. What I'm going to do for now, I'm just going to draw in a horizontal ray right here, right there, and let me make this a little bit thicker, just for the sake of this example. But okay, so then I drew in this, right? And we're going to drop down and I'm going to let you guys see how this looks in a little bit. But what we see is that price fell at one point, created this low, and it bounced from this level, which was the high from 2 days ago. Remember, each candle represents a day's worth of activity. So then this was the high from 2 days ago, but we can see price fell, tested the high from 2 days ago, and then immediately bounced from it, which means that this candle's high acted as support on this day. Yeah, and you see similar stuff even in price history, like for instance, right here, like from this candle's high right here. Let me push this up a little bit right there. This candle's high right here acted as support on this day. But of course, you'll be able to see this all more clearly. Like what I'm going to do, I'm going to break this down for you guys, so you guys can see how this all works. But remember, we're looking at 1 day's worth of price action. Now, let me ask you guys this simple question, which is very simple. If you've been living on this earth long enough, you should know this. How many hours are in a day? Let me ask that question. How many hours are in a day? Now, most of you guys should know this, right? 24 hours in a day. Davina said 24, right? So when we drop down to the 1 hour chart, how many candles should we see on the 1 hour chart? It's pretty apparent, right? On the 1 hour chart, each candle represents 1 hour. So then for this day right here, on this specific day, which is a 24-hour period, if we drop down to the 1 hour chart, we should see 24 candles. Yep, exactly. On this day, we should see 24 candles. So then what I'm going to do is highlight this candle, and we're going to zoom in, and we're going to see that clearly, that what we have is 24 candles. Let me make this yellow. And what I'm going to do is highlight this candle right here. And then what we're going to do now is drop down to the 1 hour chart, because you should see, well, before we do that, let's do this. Okay. So then on the 1 hour chart, we have 24 candles. That's what we already know, right? You should see 24 candles within this time period. Now, if you go to the 4 hour chart, where each candle represents a 4 hour time period, then how many candles should you expect for this one single day? Remember, we have 24 hours in a day. If we drop down to the 4 hour chart, how many candles should we see? Okay. Yeah. Cynthia said 6. Davina said 6. Chris said 6. And you guys are correct. We should see 6, right? So then what I'm going to do is drop down to the 4 hour chart, and we should see 6 candles on this period or for this particular day, right? So then let's do that right now. Let's drop down to the 4 hour.
But we went over to the previous day.
Yeah. So let's count this right now. Now I know
we went over to the previous day.
we have to change this a little bit, but what we want to do is measure, because I think let me just see if I could modify this, because I know I went and did some of the previous day. Let me see if I could push this. Yeah, let me just do this right quick like this. All right, because maybe that'll be better. So let's go to the 4 hour. All right, so this is much better. So then right here you see that in this particular zone, we see 6 candles, right? We see 1, 2, 3, 4, 5, 6. We see 6 candles representing that day's worth of price action. And there's also a tool that you could use as well. You could take this tool, which is the date range tool, take it from this area right here, drag it all the way down to here. And, we get, they give us 5 bars and 20 hours, but you guys get the idea. Really, this is really 6 days worth. 6 4 hour candles. So then we have this candle right here, this candle, this candle, this candle, this candle. But we can see here that on this day, on this particular day, price went up, then it went down. It went down, then it went up, then it went down again to test these lows, then it pushed up, right? That's what happened on this particular day. Now, if we drop down to the 1 hour chart, we should see 24 candles. So let's do that right now. I'm going to drop down to the 1 hour. And on the 1 hour, we see 24 candles. If we was to count this from this candle right here and move this all the way down to here, we see that we get 23 bars, 23 hours, which is about, because this is the 23rd hour candlestick. Once this candle closes, we get a full 24 hours. But you see here that in a nutshell, it's pretty much 24 hours or 24 candles. So then each candle represents 1 hour. Remember, we highlighted that entire day. We started from the day, and we went down to the 4 hour, and we saw that the 4 hour has 6 candles. But then from there, we dropped down to the 1 hour, and we see that we have 24 candles. But each chart tells you a little bit more about what's really happening for that particular day. Like on the daily, we didn't really see much. All we saw was the opening price, the closing price, and the high and low. That's all we saw. But once we drop down to these smaller time frames, we get more details on what happened for that particular day. So then if you look at this particular pair, what we see is that price started here, fell down, went up, fell down and tested these lows, and then went back up again, right? So then let me just draw this out. If you wanted to, you can literally draw it out like this if you wanted to. Let me make this black. But price went down, right? Then from here, it pretty much went up. And then it tested this area again, down. And then it went up. And then it fell all the way down. And then it bounced from there. And then it went up. And then you can see that price pretty much settled and closed right around here. But that's really how you define what really happened. So then right here, we see that we have this price action. So then, like, I don't want to move ahead of myself, but then seeing this, you know that, okay, then there's a bias to the downside. We should look to go short. But that's another topic in itself. I don't want to get into like, it can really confuse a lot of the beginners here. And if you guys are confused, let us know. We can definitely explain more. But what we wanted to show you guys was just the simplicity of it, how you can go look at things from the daily chart perspective and then work your way down. And it would help you get an idea of what's really going on in the market. So then, yeah, so then that's the reason why I wanted to drop down and show you guys these candles and show you guys why it's very important to understand the anatomy of a candlestick and how that can also help you to determine what's happening for a particular day. But if we go back to the daily chart, let's do that right now. We go back to the daily. Now, on this 1 hour, we see that based on how price moves, you know, we all know, like, I'm trying to figure out how much to go, because, well, let me just do this right now while we have the time. You know, when we said, whenever price makes movements, like we said that price moves in what? Like, whenever price moves, it moves in what? It does this. Does price move in a straight line? No, it moves in waves, right? Price moves in waves, right? So then whenever price is moving up, price is typically doing this. We get this impulse wave, then we get a correction, and then we get another impulse wave, right? We get this move. Price always moves in waves in a zigzag fashion. And what it does, it creates higher highs and higher lows and higher highs when it's moving up. And when it's moving down, it's typically creating lower lows and lower highs and lower lows. That's how the market typically moves. It always moves in waves, and it's always creating either higher highs and higher lows when price is trending upwards, and it's creating lower lows and lower highs when price is trending downwards. So let's drop down to this chart right here on the 1 hour. And what do we see? We see that price pretty much made a lower low, right? Price broke this low right here, made a lower low. It corrected. So then what do we expect to happen next? In a nutshell, we expect for price to eventually, it could correct higher, but we expect for price to eventually make a lower low, right? Or go low for the day, right? That's what we're expecting, right? So then let's see if the following day's candle is bearish. Let's just see that, right? Let's just see if the following day's candle is bearish. So then what I'm going to do is let me take this off. We're going to drop or go back up to the daily chart. And what we're going to do is check to see what the next day's candle is. So hopefully it'll be a bearish candle so that this can make a lot more sense. So let's see. Okay, so you see that, right? The following day's candle was bearish. Price went down, right? But you saw that when you went to a smaller time frame and you plotted these price waves, right?
You examined the
structure. You examined the structure of the market. So then we knew that this was a bearish candle, right? And all we knew is that the closing price was lower than the opening price, right? That's what we knew. And that there was a possibility for us to look for or for price to fall. But we don't know anything yet because all we got is this data right here. But when you drop down to a smaller time frame, you get more details on what's really happening in the market. And as you guys know, what we predicted that the market should go lower. And what happened? The market fell lower, right? We was able to predict that just from the previous day's daily price action, right? Like what I just want to show you guys the keys on how this works. Let me know if this is making sense for some of you guys. I know for the beginners, it's going to take time. They may have to look at some of this stuff over and over again. And we're going to constantly review this stuff over and over and over and over again so you guys can understand how this works. Because once you understand this stuff, you will have a skill that you will be able to use for the rest of your life to make some money, regardless of if you're trading stocks, if you're trading futures, if you're trading options, ETFs, you'll be able to forecast and predict what's going to happen. So then we can see here that price did exactly what we did. We drew this line even before we even saw the previous day's price action, and we saw that price was sliding lower, and it slid lower right almost to the exact spot that I identified, and I didn't even know that. Right down to this spot right here. But we can see that price was bearish for that day, and we was able to predict that. But the more you do this, the more you'll be able to understand and see exactly how to predict and forecast what would happen with price. But yeah, I know a lot of this is new for some of you guys, but you guys will definitely get it. The more you do it, the more you would get it, the more you would see it. The more we do it over and over again, you'll eventually get it. You'll have that aha moment, and it'll be like, okay, wow, I'm finally getting it now. So yeah. All right. So all right. Okay. So what I wanted to share was that when we saw this move to the upside right here, when we saw this correction, for one, we saw price create this lower low. Let me just we saw price create a lower low. Wait, let me delete that. Well, let me lower. Let me delete this. Let me do. Okay, we saw price create this lower low, and then when we saw that price created a lower low, all we wanted to see was a lower high before we consider selling. So then, what did price do? It went up and tested this structure area right here, and this is where we saw our lower high. Maybe was the let me take this and let me move this over here, and let me clone this. And right here we saw a lower high. Why? Because this high right here is lower than this high. That's what makes it a lower high. Prior to this, we had prices making higher highs and higher lows. So if we was to draw this out, we get a high right here. Now let's say that you get a high. We had a high, and then price eventually formed a higher low right there. And then right here, what happens? Price breaks this high, and we get a higher high right there, higher high. So then when price fell all the way down, we got a lower low. Why? Because price broke this low. Remember, this is the last higher low. Once price broke and closed below this low, we now have a lower low. And whenever we get this lower low, the next thing we want to look for is a lower high. Price went up, and it formed what we thought would be a lower high. And then right around here, you could have looked to sell. Somewhere around this area, you would have looked for your selling opportunity. Somewhere, well, I'll just keep it green. Somewhere right around here, you'll be looking to sell, and excuse me, guys. You'll be looking to sell, and you'll trade this lower. And as you guys can see, price fell for most of the day. But we was able to predict what would happen by looking at the previous day's price action. So yeah, but we're going to do more examples of this just to give you guys an idea of how this works. But right now, what happened? We can just stay on this chart, and we can just draw in the price waves on this chart for now. So then price went, and what happened? It formed a what? When price did this and it went down to this level, what did it form? Did it form a higher low or a lower low? Okay. Yeah, I believe you guys said a lower low, right? Yeah, it formed a lower low. So then what do you expect to look for next? If price formed a lower low, what's the next thing you want to look for? A lower high. Exactly. So then what well, let me delete that. We don't need that. So then what we're going to do is you pretty much going to wait for price to correct and correct higher. And what does it correct to? It corrects to this previous structure high right around here. Let me do something. Let me take this box in this area and let me drag it all the way to here. Oops. Okay, let me turn this off. It travels all the way back up to this high right here, right? So price went up to previous structure right here where we had these two bottoms, you could say, or where the previous higher low was. For one, it broke this high. It broke this structure, and once it broke it, it pushed a little bit higher, but we can see that it tested this structure right here. But from there, we saw that price made a fall to the downside. It started falling. So then guess where we could have sold? Right around here. Even if you would have sold early, like let's just say we would have sold right around here when price tested this previous area, this previous low. If we would have placed our stop above this high right here, would we have gotten stopped out? Like for those who may need to know, your stop order is where if price was to hit this level, you would lose money. So let's just say that we entered our buy or our sell right here, and we placed our stop behind this high right here. Now, would we have gotten stopped out? No, exactly, right? So then even if you would have entered right around here, right? Let's just say we entered a trade, a short, right around here when price made this high, we placed our stop above this high, or we can even do this. We can even place it at the very high if we wanted to. But let's just do it a little bit above the high. We place it above the high. And let's just say that, we wanted to trade this lower. And what we're going to assume is that we're going to get, let's just say that we're going to get, let's just assume that price is going to travel halfway this move right here. So whatever this move is, half of this move lower. Let's just assume that, right? Just for the sake of this example. Usually we do something else, and I'm going to show you what we're going to do next. But what we could do is take the Fibonacci 2, and let's just do the 236. Let's just do this because we do need to talk about this more. Let's just say that price travels 75% of this entire move lower. So that's what we're expecting. Like on this sell, we're expecting for price to go 75% lower. So then what we'll do is we can do it from the swing high, and it pretty much already did that. But let's see if we can get an extension lower. Let's see if we can get price to extend a little bit lower. Let's say to this area right here. Let's do that because we have structure and support. So then what I'm going to do is just place a green line right around this area right here. Let's just say we want price to reach this area, and yeah, it pretty much did already. Yeah, but yeah, just to let you guys know, if we would have entered a short right around here, this would have been our take profit right here. So then if we was to drag this all the way down to here, then that would give us about a 1.5 reward to risk, which is okay. It's not the best, but let's see what happens. Let's see if price does actually touch it, and price does actually touch it right here. So then we would have made money on that trade. But this is all you're doing, right? All you're doing is identifying lower lows, lower highs, and structure, and you're trading off of that. So then right when price makes a lower low, right, what we can do next is draw these lines again. We can draw the next correction or next line from this low all the way up to this high, right? So now we have a lower high up here, and we can draw this line because now we have already two green candles, which represents a correction. But this lower high created a lower low and a lower close right now. Okay, now let me ask you guys this question. Why isn't it that we couldn't use this as the low right here? Why couldn't we just drop the candle? Because it did create a low, right? Why didn't we draw the line to this candle? I mean, to this low right here of this candle. Why didn't we do that? Why do we have to use this candle right here instead of this candle? Yeah, okay, yeah, I know Cynthia said there was a lower low. Yeah, and there's a lower low on this candle too. Remember, the wick of this candle created a lower low. But why didn't we want to create, or why didn't we want to draw this as the next leg or next wave? Now, what do we say was the condition of drawing these waves? Remember, this is very important because if you don't know this, then you will make a lot of mistakes. But what did we say classifies a true wave or true lower low and a lower high or a true wave? What constitutes a true wave? Like, what has to happen in order for this to really be a true wave? Okay, so let me just do this. Let me take this line right here. I'm going to take this line and I'm going to drag it to this low right here. So then on this move lower, we saw that price pierce this level. It did create a lower low, but what did not happen? Okay, yeah, Alex said the true low is the one that closes below the previous low. Yep, okay, exactly. It needs a lower low and a lower close before the previous low. Remember, in order for us to know what the true wave is, it has to create a lower low and a lower close. Just because price created a lower low doesn't mean anything. You know, what you need to see is a clear close below this low. So when does that happen? That happens for the first time right when we get this candle right here. So this candle right here gives us that time when price closed below it. Remember, we have to see the candle body close below this level, that low point. And as soon as we see that, then we know that, hey, we do have the next true wave that's forming right now because of this, but we'll draw it not to here, even though this created the low. That doesn't mean anything. What matters is the close. So then from here, we'll draw in our next wave to here because this is where price starts pulling back. So then that becomes our lower low right now. So then we can clone this. And this becomes our lower low right now. Does that make sense? Let me know if that makes sense because this is so important to know and understand when it comes to trading.
Yeah. And, you know, and that's the reason why really the closing price or where that particular instrument closes is really one of the most important data points you need to take note of. Like when you get this close, that's a true violation of this particular lower low here. So then we need to see that particular time frame, that candle close below the previous low in order for us to identify that there was a true structural violation and that the market is really biased, or there's conviction to move the market lower. So then we need to see that. So we need to see a lower low and a lower close, not just a lower low. We got the lower low here during this candlestick right here, but we didn't get the lower close, which means that this structural level was still in play, that this structural zone of support was still in operation. And because we see that price closed above this low. You see these with these two candlesticks, even though it breached the low point of this low, it still closed above it. And you remember the closing price is really one of the most important prices you need to monitor. So then we can see here how we got this close. We got that true violation here, but we need to identify where this wave ends or where this impulsive move ends, and it ends at this lower low right here. So then here is a lower low, and of course we got a lower close as well from this previous low up here.
Yeah. So does that make sense for you guys? Because what we want you guys to do is start day trading and making money throughout the day. Like we said before, it's quite possible, and it's not hard at all, to make 2%, 3%, even up to 5% per day just by learning how to day trade. Like, all you have to do, like, to be honest with you, you can specifically look at the 1 hour time frame and find trading opportunities and make some good money just strictly trading off the 1 hour time frame once you understand how this works, because it's pretty simple. So then let me ask you guys this next question. Okay, so then right now, should we still be looking to buy or should we be looking to sell? What should our buys be? Should we be looking for sell opportunities or buying opportunities based off of what we see right now on the 1 hour? Right? Sell, right? We should be on the sell side, right? So now we're looking to sell. And where do we want to sell at? We want to sell at what type of level? Support or resistance? Like, do we want to sell at support or sell at resistance? Resistance, right? So then it's pretty simple. So then all you're going to do is find the next structural area. So then what's the next structural area that price could retrace to? Bang, right here, where this lower low is, right? So then what we're going to do is draw in a line right here to this level right here. Let me just, I'll make this blue for the sake of this example. So we're just going to draw in a line.
It could be a range too.
And yeah, and it could be a range of levels. But you know, you guys get the point. Right when price tests this line or this area, then that's when we'll look for a selling opportunity, right? So let's see if that does happen. Remember, all you have to do is do this over and over again, and you will make a good living trading the markets. So what we're going to do is wait for price to retrace. Now, it could push up and do it could push up and do something completely different than what we expect. But as long as price is contained and it doesn't break above this high right here, then
we're in a bear market.
We're in a bear market. Let's just say that we're in a bear market. But as soon as we get a violation of this high, then that's when we need to change our buys and look for buying opportunities. But let's see what happens when price gets to this zone and area right here. What you can also do is look at these wicks to help you get the zone if you want. So you can draw in a box maybe right around here, around this zone right here to see what's going to happen. So then let's just see what happens. Let's see if price does respect it. It may and it may not. So, okay, so then we get a correction and then another impulse leg. So what we could do right now is draw that in. So we get this right now, and now we get this, right? So now we get a lower high, and then we get a lower low, right? So let's do this right now. Let's clone this, and okay, we got a lower low, but before that lower low, we got a lower high. Right? Okay. So then we saw that, and right now, with the way things are looking, price pushed up. I mean, we're still below. Let me just add this pink line again. You know, we're still below this low, but it's almost creating an equal high, almost. So then this is when you have to be extra careful, because for all we know, price could be in the midst of a reversal. We don't know, but let's see what happens. There may be a selling opportunity around here, but if you do take it, you know, it could be quite risky. But we do have price hitting this structure area right here. So then if he was to drag this line down to this lower low right here, this is where price is hitting the structure. And typically right around here, you'll be looking for another selling opportunity. So then, but you want to wait for bearish confirmation first. You don't want to just enter a trade. But let's see what happens. Let's see if price respects this structure area to the left, because for all we know, price could push up and break even above these highs. So let's see what happens. Okay, so now we get a bearish candle. So then right now, should we be looking to buy or sell? Should we be looking to buy or sell? Yep, we'll be looking to sell. So then right now we're going to enter a sell, and this sell can go in our favor or it may not go in our favor. What we're going to do is measure and see how far price can go. And we'll take this tool that we talked about before. And I'm just going to do this just for the sake of this presentation. So then we're going to target the 127. Let's see what happens. This may be a winner or it may be a loser. Let's see. Okay, so price starts reversing. Remember, we was a little bit concerned anyways because price went and it almost had a 100% retracement. So then there's a possibility that we may get stopped out, and that's okay because that happens. So then if price does continue breaking and it breaks this high, right? Once it breaks this high, what do we now have? So it broke this lower high, right? It broke this lower high. So then now what do we have now? Yeah, okay, yeah, Stuart, yeah, he's going a little bit ahead. Yep, exactly. What we see is an inverted head and shoulders, but we have what you would call a higher high, right? A higher high. But let's just keep moving forward. Okay, so then now we can consider this the higher high right here on this high, because now we have two red bearish candles, which represents the pullback. So then what we can do from here, we can just draw a line from here all the way up to here. Right? And right now we have a higher high. Why? Because we saw price violate and break and close above this high. So now we have a higher high, right? Now, based on this higher high, should we be looking for opportunities to buy or sell? Let me ask you guys that question. Should we be looking to buy or sell? Yep. Everyone says buy, buy, buy. Yep. And if you wanted to, you could wait until we get this move right here. Let me just draw it in. You could wait for us to see something like this where price corrects, forms a higher low, and then it pushes up to form a higher high. You could wait and look for this 1, 2, 3 move. Remember, we talked about that on one of our meetings where we have a move. This would consider leg 1. And then the pullback will be considered 2, leg 2. And then this move right here will be considered leg 3 right here. So you could wait for a 1, 2, 3 move to know for certain that, we're in a bullish market. However, if you wanted to, you could take that risk. And what you could say is this, is that if price does retrace down to this area or zone again, I'm going to look for a buying opportunity, right? Right down to this recent structure high, right? So then we can identify this zone and just say, okay, then let's just see what happens when price reaches this zone again. Let's see what happens. So then what we're going to do is monitor price, see if we can get a buying opportunity here. And if not, then we'll just keep on looking, keep on moving. So then we see that price touched this zone. Looks like it wants to push higher from there. And as you can see, it did, right? So it pushed back into this zone right here. And then this is where we would have went and entered our buy right around here. So then price is now going up and we could have made some money on this move to the upside. like what we're showing you guys is the keys to the kingdom. You know, this is why we emphasize learning how to draw these waves properly. Like, this is really what it's all about. Identifying these true waves, learning about lower lows, lower highs, and higher lows. And then once you learn about them, then making decisions from there. So then from here, we would have bought right around this structure area. Remember this zone, remember support and resistance is really a zone. It's really a zone of structure. And you probably could have used previous areas of structure to help you out. Like right around here, like this was a structure area. Let me draw in a blue line right here, because most likely we saw a zone that was created. A zone. Yep, a zone that was created. So yeah, but price pushed past that zone. We don't really need it. But yeah, to make a long story short, price pretty much tested this previous high right here, and then we saw price shoot up from there. So that's all you're going to do. Like, you can make a great living trading off the 1 hour chart alone and making 2 to 3% per day. It's quite possible. But lately, we've been teaching you guys how to do top-down analysis, just to understand stuff from the daily chart and work your way down. But this is really what trading is all about. It's all about doing this. So then, now that we have this, okay, price created this higher low, and we saw price explode to the upside. Now we're still going to be in buy mode. Now we're still looking for, you know, a buying opportunity. But we did get the strong pullback. The fact that we saw the strong pullback has me a little bit concerned now. But what we can do is draw in this line from this low to this high up here, all the way up to this high right there, right? And then we have this low. Price made this low. Oops. Price made this low right here. I'm a little bit iffy on buying now because this candle is very, very strong. So I'm not going to do anything. I'm going to wait to see what happens. Whenever you see a strong pullback like this, where it's one single strong candle, that can also indicate reversal. There's a possibility that we may see price reverse and start sliding lower. So then let's see what happens. And it does, right? So then when we seen this happen, what did price create? Did it create a higher high, a higher low, or a lower low? What did price create when we saw price make this move to the downside? Yep, it created a lower low. Exactly, a lower low, right? So then are we going to be looking for an opportunity to buy or sell now? It created the lower low. Price formed this lower low. It could be going lower, but will we be looking to buy or sell right now? Yep, everyone says sell. Yep, and you guys are correct. It's really just that simple. So then what we're going to do is wait for the push to the, wait for the next candle, and you can see this was a strong candle, right? So then now I'm a little iffy again. You know, I don't want to assume anything because this could have been just a fake out to fake us into doing something that may not be the right decision to do. So then right now I'm neutral. We did get this lower low right here. Price created this strong candle, but I'm going to wait now because right now I don't know what's going to happen. We did get a higher high up here. Let me clone this. We did get a higher high. Price formed a lower low because it broke and closed below this current low. Let me just draw that in right here. We had this low. Price created a lower high. Then we had price pushed to the upside, right? So because this move was very strong, I'm going to wait a little bit. I want to wait to either see price break this high right here. I want to see price either break this high or price either break this low right here before I decide to do anything now. Because of this candle right here, it's pretty strong. I'm going to wait to see what happens. So from here, Okay, we see price went down. It seemed like there's still conviction to the downside. We did get a break to the downside, but I want to see an expansion to the downside. So then now we do get that expansion. Now I'm a little bit more confident that, we're bearish. So then this is all we're going to do. So right now we're just going to look for a retracement or a selling opportunity. We see price kept falling, and right now, okay, so then right as soon as we get these two candles, now we can draw in our waves. So then we saw that price pushed up in this area. Well, no, we're not going to draw this. Yeah, yeah. Let me take that. Okay, so then now that well, you could draw this in if you want, but you don't have to, because but yeah, let's just draw it in for the sake of just drawing it. We did get a strong move, so then we can consider this a lower high, and then price created a lower low, right? So we can clone this. Lower high, and then price just recently created a lower low, right? So then now we're going to be looking for a selling opportunity, and where we're going to look for this sell at, right here, where this last recent structure area is, or really anywhere between this lower low right here that was forming this lower high right here, anywhere within this zone right here. So then we're going to look for a selling opportunity again for this particular pair. Let's make this right around here, right? So let's see what happens. Remember, we're going to look for a selling opportunity somewhere in this area. So let's see what happens. Hopefully we get a push up into this area. Okay, price goes in this area, right? It touched this area, and now we're seeing price slide, right? We enter our sell, and let's see what happens. If we wanted to, we could target the lows down here. If we want to, this could be where our target is, and let's see what happens. Price pushes down, right? If you guys learn how to do this, you guys will be very, very successful. It's really, really simple. But watch this video over and over again. Watch actually the 2 back to the basics sessions over and over again. All we're doing is simplifying trading, learning how to draw these price waves, identifying lower lows, lower highs, and higher lows, and using that as a way to trade the markets. That's all that we're doing. And you can see here, just from our examples, just from today, how many trades did we have that would have won? Well, for one, we started here. Would have been a 1 winner. This would have been a loser, of course. This would have been a loser. A winner right here. We would have won right here. So we're 2 out of 3. And then this would have been a winner right here. So then we're 3 out of 4. We won 3 trades and lost only 1 trade. So then this is how you guys should be trading. And this was strictly on the Euro USD, but you can do this on a number of different pairs. But the reason why I'm emphasizing this is because we want to really show you guys that spreadsheet and how it's really possible to make 2 to 3% per day, just using this method by itself, because it works like clockwork. We back tested it over and over again. It really, really does work. So then if you guys have time, just make sure you look at this video over and over again so you guys understand exactly how this works, because it's really, really simple. Do you simply do this on a 1 hour, or do you go from higher to lower time frames with this method? To be honest with you, you could use this on any time frame, but I primarily did most of the back testing on the 1 hour time frame, and it really works like a charm. So then it works really, really good. Really, 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 really good. So then in this case right here, let's just do one more example. So then price corrected, formed a lower high, and we get this impulse move. So then now we're going to wait for 2 pullback candles at least. But then the next area of resistance is right here. Remember, we want to sell at resistance and buy at support. But this is why learning how to draw these price waves properly is so key, because the true swing levels tell you the true pivot points in the market. So Let's just do this again twice. Okay, so now what we want to do is draw in this next leg right here. Right, so then price comes in, forms a lower low. We know this is the pullback. So where are we expecting price to pull back to? Right to this section right here. What was once support right here will become resistance. What was once the floor will become the ceiling. So then let's see what happens. Let's see if we can get price to go up there. Okay, price hits this area. Now we're looking for bearish confirmation in this zone. And it may push a little bit above it, but we're looking to sell right now. Let's see if there's anything else we can go off of. Okay, it may go up to this level right here, where this lower low, lower high is, but it's a range where price could go. But let's see. But let me just, I'm just going to draw in the blue line right here. And because price could very well go up to this level as well. So then it could be anywhere within this zone right here. But let's just keep it right here, and we'll see what happens. So then price is testing this zone right here. And let's see what happens. Okay, so it went to test this. We get this bearish candle. It tested this high right here. Let's see what happens. The next candle, boom, get a bearish candle. Look to sell. Enter our short. And what we could do is trade it where? We could trade it to this target, or we could shoot for an extended target. It's up to you, however you want to play it. But that's all we're doing. Okay, let's see if this works. Let's see. Boom, 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 boom. Okay, well, it sort of nicked it right here. Yeah, it sort of nicked it. Let me see if it did. Let's zoom in. Yeah, you can see it pierced the level right here. So it did touch our target, and then from there it started pushing to the upside from there. But as you guys can see right now, we're 4 out of 5, right? We're 4 out of 5. But that's all we're doing. And as you guys know, price looks like it may want to reverse, but we don't know yet. Price will have to break this high up here in order for us to know. But yeah, that's it, guys. Are there any questions about this particular method? This was pretty much just a review from last week. Now, I wanted to touch on something different, but or not from last week, but from 2 weeks ago, because I think the last time we did a back to the basics session was 2 weeks ago, I believe. But all we're doing is just reviewing this simple method of just identifying the true market structure, lower lows, lower highs,
and how to read a price
lower
chart.
lows, lower highs, and how to read a price chart properly. What I suggest is that you guys look at that video again on how to read a price chart. It's in month 1 videos. Look at that. And this is basics, guys. This isn't advanced stuff, but we can see how this basic method can help you make a fortune if you use it consistently. Like, that's what I want to emphasize, is just how if you master the basics, it can help you make a lot of money. Now, you got a lot of traders that's been trading for years. They don't even know how to do this simple stuff right here, as far as how to properly read a price chart. But once you learn how to do it, then now you have the keys to the kingdom.
Yeah, like, I was going to say there's 2 schools of thought, or there's 2 approaches to trading or investing. And of course, for us, like we try to give you guys a combination of both the fundamental aspect and the technical aspect. And what we're covering today is basic technicals, or basic technical analysis. Now, I guess, well, since this is a beginner session, I guess I can clearly explain like the difference. When we say fundamentals, what do we mean? We don't mean like the basics or rudimentary type of elements to trading. In the investing world, or in the financial world, or in the world of economics, when you say the term fundamentals, that's in reference to the market news, the headlines, the geopolitical news that's driving these prices. Because you got to realize that there is a reason why these currency pairs are moving the way they're moving. And that's primarily based on what we expect central banks to do with their monetary policy. You remember, central banks are the ones who regulate and control the monetary supply. So then they would look at the various economic data within their countries. They would look at inflation. They would look at GDP to sort of assess what they would do with that country's interest rate. So then right now we're sort of trading on what we expect central banks to do with their interest rates, whether they're going to hike rates or lower rates. But we look at technical clues within the price action and price behavior to sort of identify where these exchange rates or where these prices could go. So then we give you guys a combination of fundamental analysis where we go over a little bit of the geopolitical news. But let me just make this clear and just share this with you guys. Like, you don't really have to have a master's or a PhD in economics to understand how to trade any asset classes. You don't really have to have a good background on fundamental or intermarket analysis to be a successful trader. You can just learn a little bit of it, but it's not really necessary. Really, the key to really being a good, sound, solid trader is becoming a good, solid technician and understanding how to read the price charts. Because what you see visually plotted on the screen is the market's interpretation of the fundamental news, of the headlines, of the geopolitical news, of the various economic data that's coming out. So what you see plotted,
even prices like COVID-19, all of that.
Yeah, like what you see plotted on the screen is the market's interpretation or response to the news. So then you see that visually illustrated here. So as long as you really have a solid understanding of technicals you see how price is moving, you can trade based on these technical patterns that we're going to try to teach you guys, and that we have been teaching you guys for some time. But I just kind of wanted to explain the two schools of thought. There's fundamental analysis and there's technical analysis, and how most traders that work for your hedge funds, like a lot of them aren't really good, solid technicians. They know a lot about fundamental analysis and they know about buying and selling, but they're not really good in tech and how to dissect the financial market, how to dissect it and how to break things apart into their structural levels. But for us, like, we teach you guys how to be a technician. We teach you guys how to look at clues within the price signals and try to identify or determine what's going to take place or what's going to happen.
Yeah. So yeah, I know Cynthia asked the question: is structure the same as support? Yes and yes.
It's support and resistance. Yeah. Remember, like, support and resistance are interchangeable. Like, those zones, those structural zones, at certain points there'll be support, and at other points there'll be resistance.
Okay. Let me explain this, because when we talk about the structure of the market, we're pretty much talking about price making lower lows, lower highs. Whenever you see that, that's what you call a bearish market structure. When price is making higher highs and higher lows, it's called a bullish market structure. But what we're showing you is a way to combine both. If you draw in your price chart properly, what you would see is that every time you create a lower low or lower high, that lower low or lower high is the true swing point or pivot point, which is support and resistance. It is that. Like, so then based on how we draw it, yes, the question is correct. Yeah, structure is the same as support or resistance. If that answers your question, based on how we draw.
Yeah, like the higher highs, the higher lows,
the true higher highs,
the lower lows and the lower highs provide detail on the overall market structure, because that's how we determine trend. You remember, a bearish trend is we need to see consecutive lower lows and lower highs. On a bullish trend or an upward trend, we need to see consecutive higher lows and higher highs. So then we look at that market structure and we identify those swing points and those pivot points to sort of know where those zones of support and resistance are. The structure leaves clues. The structure provides the clues on where the buyers and the sellers are located in the market.
Yeah. So this area, this is what we call structure resistance, right around here. This is what we call it's structure, but it's called structure resistance because now it's acting as resistance. Remember, we want to look for an opportunity to sell. But this is what you would call structure resistance.
But at one point, it was a structural support.
Yep. At one point, it was structure support. Let me drag this out so that we have structure resistance. But we can see that
right there, it was structure support.
Yeah. It was support right here.
Structural support.
Yeah. It was structure support right here.
So you see how these swing points or these pivot points are interchangeable depending on what side of the market you're in. If you're trading lower and price is moving downward,
and if it
then
bounces,
it's going to encounter a support zone, a structural support level. But if price is moving upward and it's rising, then it's going to eventually counter some type of structural resistance. And just like we said before, what was once support will become during one price movement lower would become resistance on the price movement upward.
Yeah. So then for here, we saw price fall down to this level, and what happened? It bounced from this level. So then we know that this is support in this area because price bounced from it. So we can consider this as support. But then price pulled back into resistance, structure resistance. Look left, structure leaves clues. Structure resistance.
Right. Yeah. What was once support becomes resistance again.
Yeah, so then right here, it was structure resistance. And then we saw price fail and it broke this structure support right here. It broke through this zone of structure support. So then this was a floor. But then right when price broke through this floor,
flushed through,
now the floor becomes a ceiling. Now it becomes a ceiling. So then it's almost as if you have a two-layered house or a multiple layered house. You're on the first floor up here. It pushes down.
I mean the top floor.
Yeah. But you're on, like, let's just say the first floor or the top floor. It pushes down. Now you're in the basement. So then now you're going to trade up to this former floor, which is now the ceiling. I hope that makes sense. But then this becomes the ceiling now, or structure resistance, and now you're looking to sell. So then, yeah, that's pretty much how it works. But if you do this over and over again, I mean, you will have some losses along the way, but you'll win a lot, and you'll eventually grow your account. You'll compound your account, and you'll make money. All you have to do is pick maybe 4 to 5, maybe start with 3 currency pairs and practice this over and over and over and over and over again.
Yeah, exactly. And this is what we even still consider this, sort of like the basics.
Yeah, it still is basics.
It's like the basics of it, but for some people, they may consider this advanced. And we've had people that have joined even our class that worked for different institutional banks in Brazil or different parts of the world that have said that, of course, this is some of the, first time they're learning this, even coming in our class. Like, they didn't learn this, but they trade as an institutional trader for either an institutional bank in Brazil.
Yeah. Well, the mistake.
So then,
yeah.
So then, of course, a lot of traders don't really know, just how to read a price chart.
Yeah, because a lot of them are trading wrong. This is what most people are taught. They're taught this, to draw in all these waves right here. So they'll draw in every single wave. Boom, they'll draw in that way. And then they'll draw in this way. And they say, this is how you read the price chart. You got to draw in every single one of these waves and oscillations. And that's not the case. That's not what you do. You only need to draw in the true waves. And what we're telling you guys how to do is how to draw it in properly, how to draw in these true waves. And then those true waves will help you define how you need to move forward. And now this is trading still 101. This is still basics. But what we want you guys to do is practice this over and over and over again, and just pick a few currency pairs. I think we gave you guys a list of some currency pairs you could use. Like if we, let me close this out right now, because I think we're done explaining this for now. And let me go to the US dollar Canadian, because I think we gave you guys some pairs to trade.
Yeah. Now let me ask you guys this, like, for those of you guys that have been with us, like, what's another name for the Canadian dollar? For those of you guys that have been with us for some time, just a quiz, like, what's another name for the CAD or the Canadian dollar? Yep, Cynthia got it right. She said the loonie. The loonie is another name for the Canadian dollar. So then we're going to throw out some of these names to you eventually, but yeah,
this is the list that we had from, I think 2 weeks ago. We plotted this list, you can pick any of these pairs, and trade off of it, test the strategy with those pairs. They work on every single pair on the 1 hour chart, every single pair.
Yeah, exactly. So then, of course, for Euro USD, that's one of the most liquid currency pairs in the Forex market because, these are the two like regions of the world that have the strongest economies. Now, I know we mentioned before how the US and China are the two countries that are the two strongest, the two countries that have the strongest economies in the world, the US and China. But the Eurozone area, which is a League of Nations, is like 17 to, I think it could be 19 now, but it's like 17 core nations that use the euro as their common currency. Now, based on what I just said there, like with the euro, what is another term for the euro? What is another name we can call the euro? Like, I think we may have covered this, or, for those of you guys that go through the tutorials, you may know, but what's another name for the euro? And if you guys don't remember, then I'll kind of just share it. Okay, well, yeah, for the sake of time, I'll just kind of share another name for the euro is the single currency, or the common currency, because they all share a single currency. All those nations like France, Italy, Germany, Belgium, Spain, Portugal, they all share a common currency or single currency. So then you can call the euro the common currency, the single currency, but it's also called the fiber. The fiber. Because actually the way they use or create the euro bill, it's a special type of fiber. So then that's one term for the euro. Now for the sterling, I know Ryan put sterling. That's for the British pound. The British pound can also be called the sterling. That's a name for it. But there's another name for the British pound too that I didn't really share in the tutorials. It can also be called the quid. So let me just type that in. QUID, quid.
Yeah. Even sometimes I forget that, guys. that the pound is also called the quid. Yeah, but yeah.
So then that's that's another term. So you got the sterling, the British pound, pounds. You have the quid, and what about right here? What is CHF? For those of you guys that do know, what does CHF stand for? What country or what currency is that? Let me give you guys some time. CHF. Yep, the Swiss franc. Exactly. So then what's another term or name for the Swiss franc? Like a code name or a nickname? Do you guys remember? Yep, Cynthia got it right. The Swissy. Yeah, the Swissy. So yeah, these aren't important, but typically when you hear news or you hear people explain about the Forex market or different economies, you have to know some of these nicknames. There's a lot more that we're going to cover, in the course of you guys spending time with us. But the Swiss franc is the Swissy. The Canadian dollar is the loonie. What about the Australian dollar? What's another nickname for the Australian dollar? It's pretty easy. We've shared it before, or we've said it before. Yep, it's the Aussie. The Aussie. And how about the New Zealand dollar? The New Zealand dollar. See if you guys remember. Yep, the Kiwi. Yeah, Cynthia, she's on it. Yeah, she's been really looking at the the tutorials and got all of it. So yeah, exactly. The Kiwi. So yeah, but you may hear that when you hear different, reports or analysis or read different economic journals. You may hear them, call out these terms and maybe wondering, okay, what does that stand for? Where it stands for these particular currencies in these different nations. And there's reasons why, it's called what it's called. But yeah, but these are some of your major currency players. The major, how can I put it? Well, I know he has right here. These are your funding pairs right here at the top. They're mostly your most liquid pairs. The funding currency is always the one that funds the carry trade, and we'll talk about that eventually later. But then he has this category, which is a commodity link pair. And that's with our US dollar CAD, Aussie, USD, US dollar, Norwegian krona, New Zealand dollar over US dollar, and US dollar over MXN. Do you guys know what MXN is? For those of you guys that have been with us for some time, what is MXN? I know Cynthia, she may know.
Yeah, well, everyone should know. I think we talked about it before. But yeah, MXN represents a certain emerging market.
Yep, the Mexican peso.
Yeah, the Mexican peso. Yep, exactly.
So yeah, so then pretty much there's so many currencies you can trade in the world, so many opportunities for you to make money. But what we're teaching you guys here could be used, the technical skill you learn here could be applied to any financial instrument in any asset class. So then if you want to trade ETFs or you want to trade futures or commodities, you can pretty much use these same rules to actually trade those particular instruments as well.
Yeah, you can use the same rules and principles to trade any financial market. And you know what we're really showing you guys is a plethora of ways to take money or get money from the markets. Like we talk about the top-down approach, which is very powerful, starting from the weekly, working our way down to the daily, 4-hour, 1 hour. That's a method in itself that's very powerful, and you can make great money with that method. But we also just gave you guys an example of a method you can primarily use on a 1-hour chart. Just strictly looking at the 1-hour chart, there's ways you can day trade the markets. You know, so then while you're waiting for certain setups to form, using the other strategy, the top-down analysis method, you can go to the 1 hour and trade the method that we just showed you guys and day trade the markets. This is how you gain percentages each day and compound your account.
Yeah. And you know, and I also want to like even share how, you know, not one time did Nevin, you know, look at the news or follow and type in Google or go to the Squawk Box and to sort of determine what's the major news that's driving, you know, asset prices. And, you know, that's the beautiful thing about it. Like you can become a successful trader without having to go and read all these journals and news articles. But like we teach it to you guys, so at least you can have supporting, reinforcing knowledge on why a trade could work out. You need to know why currencies are moving the way they do, whether there's an environment of risk appetite or risk aversion, whether there's safe haven flows, like whatever is happening, you need to understand why, so you can kind of have another supportive reason why you want to enter that particular trade. So then we do touch on fundamental analysis, we do touch on intermarket analysis, but mostly Melvin, when he executed these trades, he used primarily technical analysis.
Okay. So then I know we're about to end in a little bit, but I want you guys to help me with something, right? I want you guys to help me. I know this is where we ended off. Okay, let's do this. Okay, we ended off here. I think last week or whatever. I'm not sure, but let's do this. I want you guys to help me find a trading opportunity in this market, right? So then let's just do that right now. I want you guys to help me find it. Like, let's just say that I'm completely clueless. I don't know what to do. Okay. Well, Cindy had a question. Do you recommend as they start looking at the daily first and going back to the weekly and work through? No, I recommend starting at the weekly and then working your way down to the daily. It's usually better starting at the higher time frame first, because the higher time frame is always going to tell you really what's really going on, the actual real bias of the market, and then work your way down to the daily. Now, when we talk about the top-down approach, that's one method to trading, which is so it's similar, but it's separate from what we just showed you guys on a 1 hour chart. You can apply two methods and make money from the markets. Like, I want you to isolate the two. I don't want you to combine what we mentioned on just now when we did the analysis on I forgot what pair we used. I think it was the US dollar, Japanese yen, or whatever, when we did the charts on the 1 hour, drawing the lower lows, lower highs. That's important, and that's a part of everything that we teach and how we analyze the markets. But I'm just teaching two different approaches. There's one approach where you look for the top down and then you try to find the higher probability trading opportunity based on key support and resistance zones on the weekly and daily. That's one method. And then we have this other method where we exclusively pay attention to the 1 hour chart, and all we're doing is identifying the true waves in the market, lower lows and lower highs. And that's another method that you could apply to make money from the markets. But both of them provide great strategies to make some good money trading the markets. So then I recommend that you learn both and you become a master of both. But right now, let's just say that we're trading the US dollar CAD, and let's just say that we want to look for another opportunity to trade this pair. So then it's pretty apparent that we did get the break and close. So then of this pair, right? I mean, price went up. We sold and it hit our target. So we still want to look for a selling opportunity. So then what I want you to do, I want you to help me find this next selling opportunity if we do get a selling opportunity. So then we see price now corrected. Okay, well, the correction wasn't really strong. So then now we see this impulse move to the downside. Okay. And I guess for this, what I'm just gonna draw this in anyways, because I think we did get a lower low, lower close. I'm just gonna draw this right here, and then this correction, and then we did get, we got one right here, but then we saw price push down. So then I'm not going to really pay too much attention to this, even though you can if you want. But let's just move forward. Remember, we're still looking for a selling opportunity. Our next sell will be somewhere around this zone and area right here, right? So let's see if that is the case. So we keep going, and what we could do is definitely stretch this out right here. So we want to look for a sell, right? So then let's see what happens. Okay, so now price went up to this area. Now, let me ask you guys this question. Should I be looking to sell now? And I'm going to also enhance this indicator because this is actually something that can help you as well determine what to do. I want you guys to help me determine what to do. So then we see price push this high. It didn't break the high yet. We have our high right around here. It didn't break this high yet. But should we be looking to sell right now? Let me ask you guys this question. Ryan said no. Okay, the Venus said the market is not going up. You should be looking to buy. Now, let me just say this. Whenever the market does correct, the market's going up. But let me ask you this question. Why do you think? Now, pull on everything that you know. Maybe look at the indicators. Look at, different things that you should know. Like, why do we may want to not trade this now? And there's really maybe two or three reasons why we don't want to look for a sell now. Okay, well, yeah, it's near overbought territory, but remember, when it's near overbought, that means you really want to sell, right? If it's overbought or near overbought, remember it's above 50. You really want to sell. Why in this case would you be hesitant? Like I'm just because this is a filter. If we would have used this on a last example that we looked at on the US dollar Japanese yen when we did that on this chart. Remember, like when we went and did this on the US dollar Japanese yen pair, we had 4 winners and 5 losers. We lost one time. But if we would have paid attention to this, we probably would have not entered that trade. Okay, Davina said resistance. Okay, we want to look at the area it was the most support. Okay, what I want you to do is look at this right here. Okay, what do we see happening with this 20 simple moving average right here? What is happening with it? Because that can help you out. That's one of the answers. What's beginning to happen with this 20 simple moving average? Remember, we talked about this yesterday or during the last back to the basics session as a filter. Okay, yep, Audrey said it's turning upwards, right? It's moving up slightly, right? It's sloping upwards. So then whenever you see it sloping upwards, what does that mean? Does it mean do we want to look for a selling opportunity? No, right? No, right? Because what that tells us is that, oops, let me okay, let me take this off. What that tells us is that momentum is changing. We see it sloping upwards. Also, what you can assume is that this is a near 100% retracement. So then whenever I see a deep retracement like this, especially with this method, I'm I'm going to be hesitant. I'm not going to look for an opportunity to sell. Remember, we're going to look for opportunities to sell, and at any moment we will be looking to sell at resistance, because what was once support will become resistance. This is our zone of resistance right here. But the reason why I'm not selling is because the 20 simple moving average is starting to slope upwards, and also this is near a 100% retracement. So then it shows us that momentum is changing. Exactly, that momentum may be changing to the upside. So then let's just see what happens, right? Let's just keep going. So we get a full 100% retracement. And really, sometimes when you see this, you want to look for a buying opportunity, but I'm not going to go over that right now. That'll be too much for you. But you can look for a chance to buy somewhere around here, somewhere right around here. But I'm not going to get into that right now. Let's see. Price hit this circle area, and it looks like we're popping up. See, the more you look at this stuff, the more you'll understand what's going to happen. But right now, we get a higher high, right? So then what do you think we need to do next? Should we be buying or selling right now? Should we look for buy opportunities or sell opportunities? Yep, we should be looking to buy, right? So then where would we look to buy at? Would we look at next support? Exactly, which is this area right here. We'll just modify this line, place it right here, this area. Right? And then we can also look historically too to see, right? So it's really just that simple. At the previous high is now support to buy. Yep, exactly. So then we have this previous high, but what we could do is draw in this zone right here, this zone. So then all we're going to do is look for our buy opportunity. Let's see, we get one. Okay, now we got two consolidation candles. This is when we draw in this way. So let's see, we get the pullback. No, we don't get the pullback. So let's see what's going to happen. Price may find support at this area right here. So price may find some support right here. But anyways, let's hope to see if we could get a full retracement. That's the goal, is to get a full complete retracement to the downside. But we may find price respecting this area, and then it may push up because of this strong move to the upside. But let's see what happens. As you guys can see, price did respect this area, this structure right here, and then it pushed higher. It respected this last swing high, right? So then now what we could do is just draw in our waves again. We'll just modify our waves. Okay, we got this right here, and then we'll drag this lower right here, and now we have this push to the upside. Okay, let's see if we get a 2-bar pullback. We do get a 2-bar pullback. So now we can draw in this extension, and now we look for the next area of support. And where is that? Well, that's right about right here where structure is. Remember, structure leaves clues. And then what we're going to do is draw in this zone right around here. Take it from here all the way maybe up to here, the 50 level, and let's see what happens. Okay, price hit this zone. We're looking for a buy. We enter a buy, and then let's see what happens. Price pushes up. All you have to do is do this over and over again, and you'll make a fortune. You'll make 2 to 3% per day. It's easily done. And over time, you'll compound your account and you'll make a fortune. Like, we're really giving you guys the keys to the kingdom here. But it's all based on learning how to read a price chart properly. So then I just wanted to go through that example for you guys. But that's it, guys. Keep practicing this, because the more you practice, the more better you're going to get at it. And it's eventually going to be, the light bulb is going to come on. And you're going to be like, wow, this is easy. Trading is easier than I thought. And then you're going to look for opportunities to buy. So then learn this strategy. And what I want you guys to do, even on, like, within the group chat, like you can help each other out. Tell others when a buying opportunity or selling opportunity may take place. Like, I want you guys to be a community and help each other, learn how to analyze the markets and learn when we may have these buying and selling opportunities. But for me, this stuff is very, very easy. I can find multiple opportunities per day to make money. But I want you guys to learn this method because I don't want you guys to solely depend on me and Marvin. I want you guys to learn this for yourself because let's just say that, God forbid something happens and then we cannot be in front of the computer. We have other responsibilities or something happens. You guys have to learn this for yourself. So then that's the reason why we're going to constantly go over this over and over again. Every weekend, back to the basics. We're going to touch on this stuff and we're also going to teach new stuff because I really want you guys to get it because once you get it, once you learn it, it's going to change your life. But that's all we have for you guys today. I hope you guys got something from today's session. Thank you guys so much for coming. And that's pretty much it. You guys have a wonderful rest of your trading week. And remember, like we say at the end of every single session, remember to always count your blessings, not your pips. And we will definitely talk to you guys soon. Stay blessed, stay encouraged, and we'll see you guys later. All right. Talk to you guys soon. All right. Okay, bye.